Hello there. Welcome to Live in Accounting. In this video, we want to look at a question paper on concepts and statement of financial position. This question is from a question paper of June 2023. This question is for 40 marks and requires you to spend on average 35 minutes on that question. So the question reads, McD Traders is a partnership business. Partners Makate, Tipalne, and Tifo Sashwayo have requested you to assist them with the preparation of the financial statement as at 31 May 2023. And on the required part, it says complete the capital notes with 5 marks, then open to prepare the statement of financial position, that is balance sheet as at 31 May 2023, 5 marks again. Then we've got all the information part. We are given capital balance on 31 May 2023. We've got some information that follows that we need to go through before we start answering it. We've got information that is following that you need to go through, and then we see that on the next page we also have got a continuation of those information. So this is what we have according to this. So on the first part, we are going to prepare the capital notes. So this is our capital note, and we have got our pre-entered figures that are there in the capital notes are there that we have to take note. So we are going to start with balance at the beginning. But if you go back to the question to try to see what we have in terms of balance at the beginning, you see that we are given those balances that is on 31 May 2023. But you see that those balances, you see that these are the balances that we are given at 31 May 2023. But if you look at the beginning of the question, you would see that we have got debts that we are given there. They have requested you to assist them with preparation of financial statement as at 31 May 2023, which means our year is ending at 31 May 2023, and the balance that we are given are at 31 May 2023. So this means these are our closing balances. So basically, this is our closing balances. So it means in the question we are not given the opening balances. We can always find them as balancing figures. So what we are going to do is that we are going to enter all the required information, and then we can now go back to calculate our opening balances. So what we have on the note again, we've got a note that is there just beneath those balances, which says Makase Tikwane decreased his capital by 500,000. This transaction was recorded. So it means this transaction was recorded, meaning that the balance that we have for Tikwane, which is 2,500,000, the 500,000 was already adjusted. So we're not going to adjust it. So we go to the second note. The second note is reading the force increased the capital by 220,000 rands. This transaction was not recorded. So it means this one was not recorded. So it means the balance for cash value that we have of 3,880,000, it had 220,000 not adjusted. So it means this was an increase of capital. So it means we have to add it there so that we get the correct final balance. So basically what we are saying is we're going to say 3,880,000, and then we add the 220,000 that was omitted. And then if you add the two, you see that you are going to get 4,100,000. So 4,100,000 becomes the correct closing balance for cash flow. So we are just going to enter that for Tingwani, we're going to enter 2,500,000 for cash value. We're going to enter 4,100,000. So we can just go there and enter such. So we are now on the answer section. We are saying for Mashkate, which is this one, we are going to put our 2 million. 2,500,000. And then for Depot, we are going to put the 4 million that we got after calculations. 4,100,000. So this is what we get. So we now are trying to see we now go back to find the operating balance. Remember, the other figures are pre-entered, so it means we are just going to find this figure. So basically, to find this figure, we are just going to say we can just maybe try to simplify it by putting it in the form of a formula so that it becomes simple. We can just say here we are saying our opening balance, which is this one. If you add additional capital contributions, and then you subtract your drawings, which are withdrawals, you are going to get your balance at the end, which is the closing balance. So the figure that we are looking for is the opening balance, which is this one. So we can just make opening balance out of the formula there. So we are saying opening balance is equal to closing balance. And then you take this additional capital on the other side, then it becomes negative. We are saying we are subtracting additional capital. Take drawings to the other side, it becomes our positive, then plus drawings. So basically, we are saying here, cost balance is 2,500,000. We subtract our additional capital, which is 0. In the case of Mashkaste, and then we add our drawings, which is 500,000. So basically, you are saying the figure that we have for closing balance plus this one, 500,000, you are going to get your 3 million. So you are going to say here 3 million. And then we do the same here where we are saying 4,100,000, and then we add our drawings, which is 0, and then we subtract additional capital, which is 220,000. So I just say 4,100,000 minus 220,000. And then what we are getting there, you're getting 3,880,000. So this is what we have. Then on the final part, obviously, we can now add the 2,500,000 plus 4,100,000, then we get 6,600,000. And then to get this one, obviously, we can add the two opening balances. So we get 3 million plus 3,880,000, or we can just say 6,600,000, then we add 500,000, we subtract 200,000, then we get this figure. So let's try to see what we get then. So we are saying 6,600,000, and then we add our 500, then we subtract 220. Then we are going to get 6,880,000. So it means here now we are getting 6,880,000. So this is the figure that we have. So what we are going to do next now, we are going to the second part of the question, whereby we are supposed to prepare the balances. So on our balance sheets, we are going to start with obviously the net current assets. So in this the list of balance that we are given, we have got tangible assets at carrying value. It means at carrying value is already calculated. So we're just going to pick as it is. This 14,112,000. So we have got our tangible assets as 4,112,000. So we can just go there and put as our tangible assets on our balance sheet or statement of financial position. So what we are saying, under non-current asset, we've got tangible assets. So tangible assets, the figure that we have there is 14,112,000. So this is what we have. And obviously, we try to find another non-current asset that we have there in the question. So that's here we are not, we have got nothing in terms of another that we are finding there. So we can go to the next in terms of the additional information to see if you have got any other non-current asset. If you go to E, it reads 22,000 rands, which is 1/3 of the fixed deposit matures on 31 August 2022. So what does it mean? It means parts of this fixed deposit is going to be a current portion of that fixed deposit, which is going to go under current asset. Then the other remainder will now go under non-current asset as what is our fixed deposit. So we are given 22,000 being equivalent to 1/3, which is supposed to be transferred to the current asset. Remember, it's being said it's going to mature on 31 August 2022, which means it's going to mature before a period of 1 year. So it's going to be a current asset. So 22,000 is the one that we are going to put there as our current asset. So the remainder become non-current asset. So basically what we are saying 22,000 is equals to 1/3. So the one that we are looking for is 2/3. That is going to be our non-current asset. So we can just make our calculation by saying what we don't have becomes our numerator, and then what we have becomes our denominator. And then obviously we are going to multiply by 22,000. over 1. But basically, if you try to reduce this fraction, it's going to be 2 over 3 times, then 3 becomes on top, becomes the numerator, and then 1 becomes the denominator. So obviously, do this, becomes 2 over 1. So basically, it means here we are multiplying by 2 over 1. So what does it mean? You are saying 2 times 220,000, and then the figure that you are supposed to get there, we're going to get 44,000. So the 44,000 is going to be our fixed deposit for as the portion for non-current assets. So we come here, we are now saying our fixed deposit. So on our fixed deposit, we are now saying 2,000 and multiply by 2, like what we did, and then we get 44,000. Right, and then this is our non-current. So we can add the 2 now, 14,112,000 plus 44,000, then you get your 14,156,000. So this is what we have. Then we go to our current assets. Obviously, we have trade and other receivables already calculated there, pre-entered. It's 959,000. And obviously, we have now the other parts. Obviously, we are going to have inventory as one of them, and then cash and cash equivalent. So we can start with inventory. We go back to the question to see what is the question saying about inventory. So if you try to see, you see that these are the figures that were given in 31 May 2023, and you see that the figure for inventory that we have there, it's 600,000. And also we have got consumables stores, which is 92,000. So it means we're going to add the two. Remember, the balance that we are given here is 31 May 2023, which is at the end of the year. So remember, inventory figures that we take to the balance sheet are the closing balances for inventory, not the opening. So we are just going to get 692, and then you get your total for inventory. So go there. So inventory, we are saying 600,000, and then we are adding your 92,000. Then we are going to get 692,000. So this is what we have. And then obviously we have now cash and cash equivalents. For cash and cash equivalents, remember we've got that 22,000 that we need to transfer as a current asset. This 22,000, remember we said it's going to be transferred to the net current asset, so to the current asset. So we are saying 22,000 is part of cash and cash equivalents. Then we check the other cash and cash equivalents in the list of balances. We've got cash float here, with cash 32,000. So basically what we are saying 32,000 plus the 1 for fixed deposit that is now current. And obviously we add the 2, we are going to get 54,000. So it means we are just going there, put our 54,000. You can just summarize here, you're working. So this is what we have in terms of our cash and cash equivalents. And then now to get our total assets, we are now saying 14,156,000 plus the total for current assets. So let's start by calculating the total for current assets. We're saying 692,000 plus 10,59,000 plus 54,000. And then we are going to get 1 million. Here we are going to get 1,705,000. So we are again saying now 1,705,000 plus 14,156,000. Then you get your figure for total assets. You're going to be 15,861,000. So this is what we have, and then we can go to the equity and liability section. Remember this total that we have 15,861,000 should be the same total that we are going to get under equity plus liabilities. So partners equity, remember we calculated that one. We calculated for capital, the figure that we got for capital there, we can just maybe try to refer back terms of the figure for capital. In the last calculation, in the notes, we got this one, which is 6,600,000. So this is going to be our figure for capital that we are going to put there, 6,600,000. So we got there. We are saying for capital, we have 6,600,000. And then now to get partners equity, we're now saying 670,000 plus 400,000. And then the figure that we are going to get is 7 million. So this is what we have. And then you can check as well in terms of our non-current liabilities, whereby we have got that mortgage loan. So we are coming here, we are saying for a mortgage loan, we've got information that we are given that can lead us to that figure. And let's try to see. Right, we have got our mortgage loan here. So the figure that we want is the closing balance for our mortgage loan. Remember, we're given this one is opening at 1 June 2022. So basically, we are just going to say opening balance of loan. Then we add our interest capitalized. Then we subtract our repayments to get our closing balance. So the simple as that. So our opening balance is 47,320,000. Then we add our interest capitalized, which is 376,800, and then we subtract our repayments, which is 604,800. Obviously, you don't get your closing balance there. So if you calculate it correctly, so remember, also we need to adjust for the current portion of loan. Remember, they're saying capital repayments are supposed to remain the same over the next financial year. So it means we also need to transfer the capital current portion of loan. So to calculate current portion of loan, current portion of loan is equal to, we calculate it as total for repayments minus interest capitalized. So basically what we are saying, repayments, we have got 604,000. We've got 604,000, and then we subtract interest capitalized 376,800. And then the figure that you are going to get becomes your current portion of loan. And that is when you subtract the two, you are going to get 228,000. So 228,000 becomes your current portion of loan. So basically, you are supposed to subtract it here, 228,000. And then you get the final balance. So basically here on the formula, you can just add here that you also subtract your current portion of loan to get your closing balance. So if you calculate correctly there, the figure that you are supposed to get there is 6,864,000. 6,864,000. So this is the same figure that we are going to put on the answer section. This is our mortgage loan. So here we are saying mortgage loan. Then we just summarize the working brackets there, and then the answer that we got there was for mortgage loan, we got 6,864,000. 6,864,000. So this is what we have in terms of our mortgage loan. So remember, it's only one item, so the total again for non-current liabilities remains the same. It's 6,864,000. And then I will go to the section of trade and other payables. So on this one, obviously, on the calculation, we are going to start with the figure for. We are going to start with the figure for our creditors control. We go to the list of balances to check what figure do we have in terms of creditors control. Right. We see that creditors control, we are given it there. If you come here, you see that creditors control here, we are given it as 1,120,000. So this is our creditors control. And then we can look for other payables that we have in the question. You see that Maybe you can start by entering it 1,120,000. So we are saying here we have got 1,120,000. Then we check for other payables that we have in the question. So if you go to additional information, we try to find out if you have got any other payables that we have in the question. Let's try to see. We have got water and electricity for 3,600 still outstanding. This is a payable, 3,600. Then we have got rent for June 2023 was received in advance. The total amount of rent received was 260,000. So this is a prepayment of an income. So it becomes also a current liability. So to get the figure that was prepaid, it's only for 1 month. So it means we have got 12 months that was received plus an extra month for June. Remember the year is ending at the end of May. So it means only June was received, so it's 1 month. So 12 plus 1 get 13. So to get the one for June, we are saying 260,000 divided by 13 months. And then you get your figure for the rent. So let's try to calculate. You see that let's try to calculate that one. 260 divided by 13. We're going to get 20,000. So it means here we've got 20,000 also. So we are going to add 33,600, then you add also 20,000. So it come here. So you're going to say plus 3,600, and then also you're supposed to get your 20,000. So this is what we gave, and then we check for other payables that we have in the question. Other payables that we have in the question, we can go back to check. If you come here at H, you put also something that is explaining about a payable. So at H, we are saying an employee's salary was omitted from the salary journal on 30 May 2023. Payments for all the contributions were not made. The details are as follows. So the gross salary is the one that we are concerned with, which is our 30,000. So basically, we are going to say our 30,000 for the employee that was omitted, and of course, we have got some contributions that are also omitted there. Remember, we are not supposed to take the net salary, we take the gross salary. So 30,000, and then we have got UIF is 1% of the gross salary. So UIF 1% of the gross salary. So we are going to 1% is 0.01 is a decimal, and then we multiply by 30,000. Then let's try to see what we get then. Obviously, we are going to get 300. And then the business contributes to UIF on a rand for rand basis. Rand for rand basis, which means the same UIF for the employee is going to be the same UIF for the employer. So so it means the same, which is 300, is going to apply for the employer. So remember, this one is inside the deductions. So we are not going to add it for the employee, but we add for the employer, which is only 300. We are going to add 300 there. And then also see 1,600 towards the employee medical fund. Medical fund for the employer, 1,600. So for the employer, we have 1,600 and this 300. So we're just going to add those ones. So here we are saying plus 1,600, and then we also add 300. And then the answer that we get now, we now put it here. So if you calculate it correctly, they are saying 1,110,000 plus 2,600 plus 20,000 plus 1,600 plus 300. And you are going to get 1,175,500. And then what we do now, we go to the, remember we've got the current portion of loan. We've got the current portion of loan that we subtracted there, which was 228,000, if you still remember. So we're going to put it here. When we calculated the final balance for loan, we had the current portion of loan that we said we are going to transfer it under current liabilities. Remember, so let's just try to see this 228,000 that we calculated here. It's our current portion of loan. And then obviously now we also have the last one which is left, which is bank overdraft. Bank overdraft, we are given it in the list of balances. You can just check there at the end of the period. There's a list of balances that we are given at the end of the period, and just try to refer back. Our bank overdraft is a question mark, which means we are going to find it as a balancing figure. So we can just leave it and then come back, calculate it. So it means since we do not have a bank overdraft, it means we cannot find the total figure for current liabilities. But obviously, total equity liabilities is the same figure that we have. It be the same figure that we are having there for total assets, which is 15,861,000. So this figure, remember this one is a zero. We're just going to put a zero there. So you've got 15,861,000. That's the same figure that we are going to put as total equity and liabilities. So we come in. We are saying 15,861,000. So if you have this figure, which means you can now find the figure for current liabilities, for total liabilities, by saying, remember, if you say our equity, let's try to see figure that we have for equity, partners equity, which is 7 million. So we say 7 million, 7 million, and then add your current liabilities that we don't have, we get this figure, which is 15,800,000. Sorry, supposed to add current liabilities and then we add non-current liabilities. Then the figure for non-current liabilities is 6,864,000. Then if you do that, you find the figure for the second balancing figure, which is 15 million. Get 15,861,000. So to get your current liabilities, just make it start with the formula. So if you are going to say this one will be equal, you are going to say your 15,861,000, and then you take 7 million on the other side, it becomes negative 8 million. And then you also take your current liabilities. Current liabilities is the one that you are making inside of the formula. Then you take this one, 6 million, becomes also a negative 6,864,000. So this is what we have. So basically, we are saying current liabilities is what, obviously, when you calculate that, the figure that you are supposed to get for current liabilities now is equal to the figure that you are supposed to get now for current liabilities, it will be equal to 1,997,000. So we have got 1,997,000. So this is the same figure that is going to come as our current liability figure. So we are saying here, we've got 1,997,000. So we can now find this balancing figure for bank overdraft by saying this figure 1,997,000 minus 1,175,500 minus 220,000. Then we get the figure for bank overdraft, which is about 593,500. So this is what we have, guys, about this video. Those who will subscribe, please subscribe and say we're still coming to more videos. Yes, for this video, I'm signing out.